It's been a tumultuous week on financial markets across the globe. Stock markets have taken investors on a rollercoaster ride. There have been rumours France would default, and now 4 Eurozone countries, France, Italy, Spain and Belgium, have banned short selling of selected bank and insurance stocks in an attempt to repel so-called pinstriped looters. And just a short time ago, Italian Prime Minister Silvio Berlusconi announced new austerity measures, which will cut government spending by €45 billion over the next 2 years. To discuss the week's events and their ramifications, we're joined now from our London studio, or from London, I should say, by James Shugg, Chief Economist at Westpac Institutional Bank. James, I know that markets at the moment are incredibly sensitive to any information, and just hitting the markets are the latest retail sales numbers for the US. Are they good or bad?
Yes, good evening, Ali. They were actually pretty good. A little bit stronger than expected when you take out the autos and gasoline. So core spending picked up slightly to 0.3% in the latest month, but there were some upward revisions to the previously published numbers. So it looks like the US consumer maybe wasn't quite as weak as some of the other figures we've had up until recently have been saying. That's a very positive sign, I think, for the US market open. The Dow futures haven't rallied on that, but at least they didn't fall away on the back of a weaker than expected number. So it looks like, for the time being at least, the positive sentiment that's prevailing in the market, that's in the market today, will prevail. Well,
indeed. Tell us about Europe, because of course Australia closed higher. Asia was a little mixed. Were European markets, were they holding their gains?
I think that it was a case of European markets catching up to the late rally that we saw on Wall Street last night, which saw the Dow end up 4% or so. So there have also been some local developments. As you say, the short selling ban probably wasn't really a factor at play. History shows that these sorts of attempts by politicians to manipulate markets tend not to have any lasting effect. And in fact, we had some disappointing French GDP numbers. The French economy stalled in the second quarter, which is worrying given that we get German and indeed the European GDP numbers for the second quarter on Tuesday next week. So there'll be some nervousness about that. But just as I say, for the time being, it's this optimism related to the rally on the US markets yesterday and the fact that it looks like being sustainable today that's helped keep European market sentiment positive.
At the same time, I guess, though, James, I mean, you probably have never seen a week where it really was roller coaster is the most, I suppose, apt description for what was going on. Is that going to keep going, or do you think the worst is over?
Oh, Ali, look, I've been in this business for 25 years, and it is one of the most extraordinary fortnights, that I've ever seen. I think there's more to come. That's the honest truth. We think that there's real concerns are going to emerge about the Japanese economy related to power shortages, given they're shifting away from nuclear energy, shutting all their power stations there. We think the Chinese economy might slow more than expected. That's another risk to watch for. And we think that the European sovereign issue is going to become a lot worse before it gets better. We probably will see at least 2 or 3 defaults, or at least debt restructures from some of the smaller European governments. And we think that the US economy people still haven't factored in just how weak we think the US economy is going to be over the next couple of years. All of those 4 issues, Japan, China, US and Europe, if they sort of hit at about the same time, could really have a significant downward impact on the stock market going forward. So I wouldn't call a bottom yet.
Yeah, indeed, but at the same time, of course, as I just said, we had this new austerity package just in the last couple of hours from Italy. Does the market read that as more of the same, or something perhaps better, more of a recognition?
It views it as a sign that governments are doing something. But the issue has been to date that none of the austerity packages in Greece, Portugal or Ireland really have been successful. The targets haven't been met. So I think that you get a positive announcement effect, but then over time I think markets come to realise that this debt issue is not going to go away without a substantial amount of the debt of European governments simply being written off. And we haven't yet got to that point. Getting to that point is going to involve a lot of pain for the banking system in Europe and flow-on impact for the economy, which we think the whole European economy will be in recession in 2012, and that will have a flow-on impact, of course, for stock markets. So we get a positive announcement effect, but I think that the longer-term story is still negative.
Markets are not for the faint-hearted at the moment. James Shugg, many thanks.
Thanks, Ali.